Good evening. Welcome to Option Center's Wednesday, 11/2/22. Welcome, everybody. It's FOMC. Glad it is over, but the charts, they never missed a beat if you're on the higher time frames. And so what we're going to go through here is ES on multiple time frames. And if you're new here, go down to that bottom right hand corner, hit that Options Center logo, and subscribe to this channel. And don't forget to hit those like buttons and comment. Those all help the algorithms get these videos out to many people out there, and hopefully traders that we can help in the field. If you're brand new, or if you're even seasoned, if you like me, I follow other traders as well on YouTube, and I like to see what they have to say, but I follow my own point of view, and but I love to see the contrarian, or if they match. So anyway, here we go. ES on the monthly time frame. We had this large channel. We broke down from the top of the channel. We are making lower highs, lower lows, moving down. We came down to this 50% retracement, had a huge bounce. I wasn't suspecting that we'd have that big of a bounce, but we did. And that's the fact. And this 8 EMA, EMA for the monthly time frame, we rejected right off of it. This is our trending indicator. We're bearish and we're trending to the downside. Okay, our next target, short and sweet, is 3200 area. I'll show you on the lower time frames why this area is so important. And this is on this monthly time frame. This is 618 retracement from the Corona crash. So we've already came 50% back from this low here. And we're looking for the next one, a little bit of confluence down there. Okay, so that's simple, short and simple. MACD is still headed downwards. RSI is headed down. Now on the weekly time frame, we focused on the weekly time frame last time I made a video. You'll see that if you want to hit the link on the last portion of the video. If you watch all the way through, you can watch that one as well, and you'll see exactly what I was talking about, and I'll just give a quick synopsis of that. We had this bearish rising wedge come through, and we have lower highs, lower lows throughout. This 5-way series here ended. We had a correction, and now I believe we're continuing on with a bigger 5-way series here, because I do think this is a 1-2 setup. And now we're getting into a 1-2 for a much larger wave 3 downward. So we're not going to expect either two things. Any bounces are going to be shallow, and then we're going to resolve to the downside, or they're going to be very fast corrections, and then we're going to continue to the downside. So either way, time wise or price wise, they're going to be short and quick. Okay, now what we were focused on, first of all, we had our bounce here. The 50% retracement was right over here at the 3500 area. We had our bounce, got over the 8 EMA, but we're rejecting right from this 20 simple moving average on the weekly, and right back from this area. We've had this on here for months. This area is so critical. We keep testing it underneath, over it, under, and back to it, and now we're making it resistance again. And so that's a very bearish symbol that we're continuing the trend to the downside. We did close on Friday right above it, so they want to keep you sweating over the weekend and contemplating, things. And it had me looking. I had to look to see what the alternative situations were, and I gave you that last week, I believe. And so what's happening now, look at what I was focusing on the last video was this weekly positive divergence, the bullish divergence. And I was saying, hey, if we cross over here, we're going to start heading to the upside. This is, we have much more further to go if this is going to be a positive divergence. Now, Monday, we had a histogram reading. We had a little green bar on Monday, and that was immediately eliminated. So we have not officially crossed. It's the close of the week that matters. It's not what happens during the week, but it certainly was giving heads up that we could cross over and close above. Now, we're not looking at that much more. We have to close the week below in order for me to continue to think that we're going to break new lows. So this divergence, if we reject off of this blue line, the yellow is the leader line. If we reject off the blue line and head down lower, make a lower low, then we just have to erase this line here, and that's no longer a positive divergence. So that's what I think is going to happen, because that's what kind of count that I have going on right now. We're going to go down to the daily. The daily trend is our friend. Check it out. Now, super important, this area here is our ping pong area from wave 1, 2, really breaking out to the upside. So this is an important area that I think we bounced off of, 3,500 area, and that 3,200 area that I was talking about. That's the bottom of that zone. Okay, and I think we'll get there. It's just a matter of how we'll get there. So as we're making this 5-wave series, I do believe that was completed, and we made a corrective wave, and now I think we're getting impulsive to the downside. So if I shorten up, let's bring that zone right back in here. If we're going to get down this 3,500 area, it's not going to go away easily, and then we'll probably bounce a little bit, and then once we get in the zone, we might not go straight down to 3,200, but maybe we bounce off of 3,400 back up to 35, and then back down to 32. Anything can happen in here, but I do think we ping pong here for a second before we continue to figure out if we're going to go lower at this point, or break up and then lower from there, or is this the final low? We'll have to determine at that time. We had a bullish divergence here that played out, and we got up to the 0 line here in the RSI. We got up to about the 60 area, and we're now trying to reject from that. We have not crossed over on the MACD yet, so it's not official that we have a bearish crossover, but price action is definitely leading us down there. Now, we do have to be very careful. Well, it kind of messed that one up. We have to be very careful if we are going to continue for some reason to the upside. This would be a corrective move for an A, and then a corrective move for B. Maybe we come down to this 20 simple day moving average, come right here, and then we come for C, back to this possible 4,000 to 4,100 area, and the 200-day moving average right around here. Now, I don't think that's very probable, but we just have to keep that in mind. So if we hold this 3,700 area, that's in play still. We break down from this 3,700 area, we're breaking down, and I think we'll come down here pretty quick to the 3,500 if that's the case. All right, let's go down to the 65-minute. I know this is a lot of information I'm throwing at you pretty quick, but you can slow this thing down, and you can, kind of revisit it as many times you need to. But this is that wedge that moved to the upside. We broke down from the wedge. We tried to, with this FOMC shenanigans, we tried to test this this downtrend line from August, I believe, and we rejected off there as well. So we're well below, and we might get some sort of little bounce or so, but we're going to make this impulsive move down, and we're going to test pretty quick, I suppose, to this 3,600 area. That's a really important. My supply is here in this green. I'm sorry, demand is here in the green. We never left the supply area that I've had here. If you look at the previous videos, this is exactly what I was talking about with the supply and the demand. And, we're rejecting off of that. We bounced off of this, rejected off of this, and, we're going to test it again. So look for that pretty soon. Nothing goes in a straight line. So will we just continue down lower pretty impulsively? Sure, we might. Or we might bounce, go down, bounce, down. We are getting to oversold territory, but that's just a condition. We could oscillate down here for a little bit of time, and before we start making a few divergences, and then we'll get a bounce out of it, and then we continue to go lower. Okay, so it's very typical. I'm still short, especially in the futures. I'm going to hold on to there, and I roll out my positions every time I get a little bit lower on my options account. But on futures, I already took off the overnight options, took profit on those. And if we do get a bounce, I'll put those options back on for next week in the MES options, put options. And then, but if we continue downward, I'm already in those future contracts. So we're going to continue to make money off of this. Okay. So there's many different strategies. You guys have to figure out your own. I do have some of those that I can, if you put in the comments, I do have videos on those. If you want to go through some of my YouTubes, they're a little bit older. I should start updating them. We'll see. All right. So that might be it. We have these dash lines here, the purple ones. That's our weekly range last week. We start to break under that and see you guys. That's a huge sign of a reversal for the weekly time frame. So we're getting close to it at that 37, 36 area. We do have options expected move. I don't usually go here, but we already have them on the, we have it labeled. We're already lower in the options expected move. So that's showing a little bit of discrepancy on some inefficiency. So if we start breaking a little bit lower from there, especially underneath this weekly time frame, and the options market, the market makers are going to have to hedge pretty aggressively, and they're going to use ES futures to do so. So that will bring price down. They're going to have to sell ES futures to in order to bring themselves back to I guess even, to say. That's a whole nother ball game, whole nother story. It's not my expertise with theoretical trading and things like that, but it's just a matter of hedging. That's why we have these options expected move on the lower side for the 37.93 and the higher side for the 4,029. Those change every single week. We put those out there on this board, and that's how I follow. It's kind of like a football field. It's like if you're playing football, you have this field, you get outside the sidelines. It's not typical to continue on the outside. Most of the gameplay is within the playing field. So anyway, I do have a video of options expected move that goes in a little bit more detail. Then I will post that one above. I'll put that out there, so if you guys are interested in checking it out. So that's it, you guys. Thanks for joining us here at Option Center. Don't forget, don't get caught following the bulls. Don't run with the bulls too long. You'll get ran over. It's a bear trend. It's a bear market. Don't fight the trend. Trend is your friend. Have a good night.